Hi, everyone, and welcome to a new episode of the Cardano Podcast. I'm Ryan Morrison, your host, and today we'll be talking about a very interesting project. I had an interview with a project that you requested a lot on social media. I'm talking about Liqwid Finance. So I sat down with DC, who is leading this project, and we talked in depth about Liqwid and what they're trying to achieve, the experience on previous rounds and previous funds in Catalyst, what the project is about. We talked about borrowing crypto, lending in crypto, the importance of stablecoins, why Cardano, and so much more. So we'll jump immediately into the interview I did with DC. But before, I wanted to share with you also some good news. In Fund 4, you'll be able to find now a proposal that I just put for the Cardano podcast. So we can get your support in there and continue this series of interviews with the teams behind the projects, the different proposals in Catalyst. So how can you support the Cardano podcast? It's simple. You can, if you're watching this on YouTube, you can just click the link that you'll be able to see in the description. That will bring you directly to the page where you can vote and leave your comments as well on our proposal in Catalyst. And if you're listening to this, you can either just go to cardanopodcast.com, and then you'll have you can click the link that will bring you to the proposal, or you can just go to cardano.ideascale and just look for their proposal under the Fund 4 Catalyst Value Onboarding campaign. And without further ado, let's just jump into the interview with DC from Liqwid. Hi guys, so as promised, I'm here with DC from Liqwid Finance, and we're going to talk about decentralized finance, DAO, liquidity pools. But first, thank you very much, DC, for taking the time, and welcome to the Cardano podcast.
Yeah, thanks, Ryan. Thanks for having me. I'm excited, to talk about Liqwid and Goguen. It's definitely a really exciting time for the Cardano community and all the things going on in terms of updates.
Yeah, it is indeed. So let's start immediately with what people are waiting for in this interview. Let's talk about Liqwid Finance. What is Liqwid Finance, and
Sure.
What's the problem that it solves, and we take it from there.
Yeah, sure. So Liqwid is an open source liquidity pool. The problem is really access to borrowing at a low cost and at a low interest rate. And Liqwid is solving that by using smart contracts, Oracle mechanisms, pooled contracts in terms of my ability to deposit ADA and have someone else lend or have someone else deposit in the same exact contract, and another user collateralize a position and borrow against the contract. So it's a peer-to-pool model in many ways, because what you're doing is using the smart contract to pool everyone's funds on the supply side. And then your borrowers who come along and actually collateralize a position, they then get to trade against the contract and take out a loan denominated in ADA or AGUSD or some other token on Cardano, right? So that's essentially the solution that we're building with Liqwid. If you've ever used Compound or AAVE, it's a very similar mechanism.
Cool. Perfect. Yeah, that was actually my question. What is maybe if we can get on a bit more, if you can give us a bit of an explanation on what the difference is with projects like AAVE or Compound, or also more like centralized, Celsius, for example.
Yeah, that's a great example. I mean, you see a lot of so first of all, like Celsius and Compound are two very different types of solutions. I look at Celsius more in like the you're going to do some KYC and AML, and there's going to be custody of your assets, right? So you're actually handing over your private keys to a Celsius or a BlockFi or a Gemini, whoever it is that you're using their lending protocol, right? For if you're using a Compound or an AAVE lending system, you're talking about trading against a smart contract where you actually maintain complete possession of your private keys while you just give up ownership of your assets But in doing so, you mint, a derivative interest-bearing token, whether it's a C token, an A token, in Liqwid, we'll call them Q tokens. But these assets are actually representing your deposit into that smart contract and the interest that it's accruing each block as a representative of how actually utilized it is. Meaning, when I deposit my ADA into a smart contract and there's other borrowers already paying per block interest on that ADA loan, I now become just another ADA liquidity provider and I'm earning. And how do I actually capture that earn? It's actually the exchange rate between my Q token and the underlying asset. So in this case, Q ADA and ADA. But that's like actually how these systems work in terms of using the interest rate and these interest-bearing, derivative tokens essentially to capture interest rate being paid off by borrowers to the suppliers of the system. So the main kind of, I guess, difference between, AAVE and Compound and these systems, they're all built on Ethereum, right? Like you have to have an ETH address. You're talking about an account style world. It's a little different when you start moving things into a Plutus, extended UTXO model where you're talking about native assets living on Cardano's blockchain. So, we're at that stage now where we've kind of built out the entire shell of our system and protocol, both, front end, back end infrastructure. And we've been mechanism to Compound today in terms of their current set of smart contracts on the governance side, on the market side that underpin their whole system. But we're actually in the process of, rebuilding our entire set of contracts in Plutus and working with Haskell devs to actually launch the full system from day one actually on Plutus. And that we can talk more about that and what that means in the as we kind of go into this more. But it really is a very different system than like the DeFi protocols you see on Ethereum. Plutus gives you things like resource determinism. We're going to have very secure oracles from day one from the work that, Cardano is basically doing with Wolfram Alpha and oracle pools and things like that. So there's even, diversity in the choice of oracles. And these are like the things that you really want to have to, get right and get securely implemented from day one when you're talking about these types of systems, because you really do rely on the oracles to kind of drive everything in terms of how does the smart contract update itself? What is the logic that's embedded in this? It's really all dependent on the price of these assets as they fluctuate over time.
That's a good point of the price of the assets. So then when you borrow that, many people would probably like choose a stable coin like a HUSD or something like that. How do you guys envision that? Do you think like much more people will do that instead of ADA or another coin in the future?
We want to encourage that, like Ryan, we as someone who has seen the rise and fall of some of these DeFi protocols in Ethereum and kind of really have been a student of the game, like I definitely understand the liquidity mode that comes when you have definitely a coin like ADA that's like the main driver of transactions and you use it to pay for fees on Cardano. But actually the mark of these successful DeFi protocols, like you said, stable coins, and actually using most of your loans being denominated specifically in these stable coins, because it means that your traders, for one, they don't want to borrow in ETH or in ADA or in Bitcoin, right? Because the price volatility up and down means that you're always essentially going to be wildly up or wildly down in your position, especially if you're borrowing or having a loan backed in that. You'd much rather actually be able to use stable coins to do things like supply, to do things like borrow and open loans. And I can give you a simple example, right? Like we're in what you can call a bull run for ADA right now. So it actually would be a terrible position to borrow a loan in ADA. You're essentially going short ADA, right? Yeah. But again, on the bear market side of things, when the price of ADA might be falling, like in, something like 2018 top, like it's a bad time to be collateralizing a position in ADA as well for the same exact reasons, right? So like, it's all about like informing the users of the protocol that like, hey, this is like a true decentralized lending system and you can use many different assets on the collateral side, on the lending side. You should use stable coins as much as you possibly can, especially if you're not an experienced trader, right? It's a much safer position. And what you're gonna see, the most common use case, I come and I deposit my ADA, maybe I take out a loan in a stable coin, right? Like that's something that we'd like stake pool operators, we'd like to work with them to kind of implement as a really early use case to say, hey, I have some ADA, I think that the price of ADA is going to continue going up or at least stay around the price that it is right now, right? I can comfortably take out a loan in AUSD and know that I'm paying a borrower interest every block that's not going to be affected by the price of this asset at all, right? essentially mitigate my price risk when I use something like a stable coin. So yeah, that's definitely, the reason that we're so keen on getting AAVE on our platform, from day one, is because of this exact thing. We don't want our users taking out loans in ADA. It's just not a good model at all. The mark of these successful protocols is having many different types of stable coins, a variety in them. But for us, we do want to have as much AAVE from day one as we possibly can.
Yeah, makes sense. So now I was just looking at the Liqwid's website, and we talked about, of course, the one on the one side is the lenders, on the other side also the borrowers, and we also you also mentioned on the side that the building side, that so the developers can build interest and liquidity directly into the dApps, and you mentioned now a use case for the stake pool operators. Maybe we can talk about this part. I think it's also very interesting. On how do you envision some use cases for injecting liquidity into some different dApps, for example?
Totally. Yeah, this is a great question. And we've actually spoken to a few different people. We talked to Credmark a lot, and the work that they're doing with, kind of DeFi credit scores and rankings. They've built out essentially an entire model around. So when I open a loan in like DeFi world today, Compound, AAVE, Maker, whatever, I can have the liquidation data, meaning like if I get liquidated, if I pay back my loan, like what my health and risk factor is, I can actually have all that information computed in a model just from the transaction ID essentially. And Credmark has built a solution for this exact thing where I can take all of my, DeFi borrow transactions, put them into this like risk model that they built and kind of output a score. What have I done in terms of how risky of a borrower am I in these DeFi systems? Now I could use that credit score to actually attest to like real world things, whether I want to get an auto loan, get a home loan, right? And we've actually talked to firms like Tala, that have actually very similar products, but more actually just totally on the CeFi side. So Tala is for like users across India, across sub-Saharan Africa. If I want to open a loan, I can download this app on my phone. It basically has a credit data algorithm that's reading my social media, reading my contact history, my GPS system on my phone, all of these data points that they're tracking to output basically a risk metric for me as a borrower, and then giving me a credit line of like $50 to $500 as a borrower. And this is actually a hugely successful product. They've processed over 2 billion, literally like people, like individual users through their system since launch. And we're actually talking with them on Monday about a potential integration into our system to allow some of their users to actually mint like an NFT. And that could be like serving as the first form of a non-collateralized loan that's actually backed by a true system, because they've gone through Tala, they've gone through their risk metrics. They actually have a KYC and AML, setup, and the actual, charter to offer zero collateralized loans. We can white label their service with a product like Liqwid. And then you have access to these liquidity pools, but you're using Tala to do things like your KYC, AML, and also onboard a lot of their users who have already used their product. All they would need to do is kind of, connect an API. Once they enter Liqwid, using something like a Tala Prism, maybe they could mint an NFT token. It would then allow them a credit line of maybe up to, whatever, $500. You would then offer that as an uncollateralized liquidity pool to only, whatever AAVE suppliers who want maybe a higher, risk level for the higher reward that would probably come with that, because you could start, lending at that point at like 12% APY instead of something like 4 to 5%, which is what the borrower rate will probably be, the supply rate will probably be for AAVE in the normal liquid money market. So yeah, that's just a simple use case. And there's many of those. Like there's examples where, Dharma is a really good one where you can actually build like kind of like a savings account on top of the compound stablecoin markets. And it's a really easy way to it's a use case that many people get, because it's like, okay, I can just save up my AAVE, and it's going to be sitting in this whatever liquid money market, or very similar to AAVE money market. And I'll just basically build a product on top of it that's just capturing that in a very nice way and has like some off ramp to fiat, right? Similar to what Dharma has done. So there's tons of examples like that. You can go into the identity space, do things more similar to what we're talking about with Tala, and an introduction of their product into our Tala Prism, and then a connection into Liqwid. But yeah, we directly plan on integrating with like Atala Prism. That's like, V1.5 is like something we're really pushing for to get identity into our stack. Because once you have identity, you can do so many more cool and interesting things that Ethereum has not even explored, right? Like when I'm in Ethereum, I have, a 0x address, and I'm just another anonymous DeFi user, right? But like when you have Prism and you can actually, track and trace these things and use really fancy, algorithms like what Credmark has built to kind of output, very accurate credit scores based on like my ability to not get liquidated as a borrower, which is essentially, my ability to not default on a loan in the DeFi sense of things. It's actually a really powerful model. You can rebuild traditional finance very quickly when you have things like identity, and then you build credit on top of that, and risk models that kind of match that. You're talking about like FICO equivalent scoring levels for DeFi users on Cardano. So that's our aim. That's our goal with Liqwid. And there's many different kind of, I guess I call them like partnership or like integrations, really, because it's like, hey, you guys have a cool API. We're building some APIs. Let's let them talk to each other. If it's Atala Prism that sits in the middle or whatever it needs to be, let's figure that out together. Because we see the synergies in having our products kind of combined, whether it's, their users, their KYC, AML, white label service, and, our open source liquidity pools that anyone can, deposit ADA or AGUST and kind of earn whatever the interest rate at that time is. So yeah, there's many different kind of ways you can go down, kind of, I call them extensible or composable use cases that kind of get built on top of things like decentralized money markets.
No, that's very interesting, especially also what you were mentioning before at the beginning with just like kind of like plugging into an existing application that has already millions of users or hundreds of thousands, or like if it's or even, and that's only one, that's a great way to get to a pool with speaking of pools of people that are already using applications that would just right away start using Liqwid. It's a great, and also the second one, you have a very good point also mentioning that on the scoring system, that it's so important in the traditional finance now, but it's not yet on DeFi because of what you mentioned. It's just like we're just like a wallet, but not a real person that can build score and
and attest to that, right? Like it's like, I bet there's like Credmark exists in some, rudimentary level on Ethereum today. Like I bet I can try to do some things, but I can't go to my mortgage agency and be like, yo, this is a Ethereum address that like is totally just a bunch of characters. Please, allow me to attest to this. Maybe I can do things like, tie that address to an ENS that I own, and then it's like more direct connection. But like, okay, we're talking about like doing this at scale for like truly billions of users. Like you actually do need something like Atala Prism. Like it's very clear why IOHK built that product. Like I know that there was a lot of pushback from Cardano community when they first launched it. It was like, how is this going to work with Cardano? What's the synergies with the public blockchain? But like, trust me, like the entry, the gateway into Cardano and all of the DeFi systems, we're going to build multiple, right, ourselves on top of this public blockchain is actually going to be this like private, kind of semi-private digital identity wallet that they plan on, open sourcing some pieces of, definitely, and building plug-in applications on top of. But I definitely think that the Atala wallet and what that's going to be for digital identity is like one of IOHK's really long-term plays in terms of bringing a lot of users into Cardano more quickly than they otherwise could just launching DeFi apps.
Yeah, exactly. Yeah. Maybe we can jump into the part of. I've got some questions of members of the community just sent. One question is regarding the. You mentioned that you'll be doing a Fair Token launch event. So first, for many of the members of the community don't know what a Fair Token launch event is. Maybe you can explain that. How is the structure and how that works?
Sure. Yeah, absolutely. So I guess the best way to explain it is to describe what the current launch mechanisms are in Ethereum. You have like the traditional ICO token sale, right? That's like kind of really old at this point, kind of 2018 era, I guess, whatever, raising
like
style.
Decades ago.
Right. Yeah. But that in that way, you're actually like, you're doing capital raising, like you're actually trying to raise the capital needed to build the product. Nowadays, what you're seeing is actually products that are getting built and launched at once, and at that same time allowing users to come in and earn the governance token tied to that protocol. And that's actually doing multiple things. It's both, one, reducing the governance risk for anyone using that system or developers building applications on top of that protocol. There's no core dev team with the admin keys that you have to worry about at that time. But then it's also actually allowing the protocol to kind of sustainably generate users, incentivize users to provide liquidity to the system, basically prove out the use case for what that application or DeFi protocol is actually trying to solve and do. So that's why you're seeing these kind of governance tokens launched. They're actually not for capital formation. Like, in many ways, these products and like these protocols are already built when they're first allowing users to come in and earn the token. So what Fair Token launch means is essentially saying, when you do that whole process, you do it without allowing early investors or VCs to come in and kind of dilute the equity before your end users get that same access to come in and provide their liquidity. That means that everyone who reaches out to me on LinkedIn and Telegram, and some of these VC guys that ask how can we provide early funding, how can we get in an early round, and I just send them the yield farming article that I sent to everyone on Twitter, because it's like, guys, this is the meaning of Fair Token launch. It means, and there's many reasons. It's a liability. It's fairness to the Cardano community who backed us through Catalyst grants and is now supporting us as we build this out on Plutus. And for our core team, even, it's just like the ethos that we started with from the launch of this project, to be as inclusive, to show actually that you can do this DeFi thing and launch a true sustainable protocol without accepting early insider VC money that in many ways kind of is just getting a very low early floor, and then basically dumping their bags at the launch of yield farming on everyone else who's now entering for the first time. So we definitely like saw that model kind of like play out over the summer, and it's fine. It's like, that's whatever, that's Ethereum and that's how the ETH bros do it. But like, this is Cardano. It's a little bit more mature of an ecosystem and a market at this point, and we're going to be the first real DeFi protocol to build something like this on the blockchain. And we just wanted to make sure that Fair Token launch for us meant that this is like setting a new way for all of the DeFi projects that are going to come after us. And it's not even about the way we accept capital, because this isn't really about capital formation. This is more about distributing the governance token and actually just like setting more of an ethos of inclusiveness, of diversity, and actually just not allowing like whatever, the same traditional VCs that have kind of come in and taken up the early projects token and then just sold it basically on the open market as soon as they could. To us, that's kind of like such a antiquated old model that we just in no part wanted to take part in that. So yeah, that's essentially why we're doing a Fair Token launch this way.
Got it. So then people are basically, by using by taking part of the on the protocol, then they get the token, and that's the way you participate, basically.
Right, by providing liquidity.
By
exactly.
providing liquidity,
yeah. And don't get me wrong, like the other protocols on Ethereum, they work this way too. Like you provide your liquidity, you can yield farm, you can earn the governance token essentially, but they're doing it while their VC insiders have basically gotten like 10x what you'll ever be able to yield farm from day one. So it's just like, it's a kind of a lopsided model for governance, and it actually has real implications down the road when you talk about implementing governance, what like super important votes on the protocol future updates mean, and kind of what those everyone has incentives, and I always say, show me the incentives, I'll show you the outcome, because like it really means like, if I hold so much of this token that I got in as early, VC insider on, I have really no incentive to do things that are probably going to, in many ways, democratize access, make the protocol more inclusive by lowering fees, doing things like that, But I have all the incentive to hire fees. I have all the incentive to make things more expensive, to generate more revenue now instead of like doing things that might make us, more competitive into the future at like the expense of like our, bottom line right now. So there's all these trade-offs that you get. And when you have different like base incentives in terms of VC layer, like truly early insider investors who just want to see like max profit, and new users who are just entering and maybe using DeFi for the first time ever, and just had access to some of these governance tokens by providing liquidity, you just basically have a really lopsided system where the top is like becomes very, in many ways, like plutocratic and just controls everything, that small group of early insiders. And like I said, we just didn't want to take part in that system. We've seen it, I've used some of those protocols because, again, they're the only thing that you can use to do some of these type of DeFi things that you want to do. And I'm not going to call any out because it doesn't even matter. They're all kind of the same in many ways. But I will say, like, the new age Ethereum DeFi protocols, they're actually more adherent to this fair token launch. Like, even if they're actually accepting insider VCs, they're doing it to a much less extent than like, what some of these initial protocols did. And they're trying to be more fair about it with their vesting schedules and things like that. So I don't want to like kind of like, throw all, I'm not saying all Ethereum DeFi protocols are bad in the way they launch. I am just saying, like I said, as a student of the game, we saw what some of these, VCs did when they had their tokens from day one, and kind of how that lopsided the governance tokenomics and really the incentives of even using the governance system when you realize that like you'll never be able to out, vote power some of these like, really kind of super early insider investors. But yeah,
and that's a good point, because then a lot of people that are watching the or listening to the Cardano podcast that are thinking of starting DeFi project or any project on top of Cardano, they might have heard in the past about that model of like more like doing like that old-fashioned ICO that we talked about, or like just like getting a VC, but they haven't. And then the whole point is that that's a short-term view, but then you have a bigger, longer-term problem, which is the governance that you might just carry out with that initial problem. So that's something for you guys to think also, that if you're planning to do it that way. That's a trade-off, basically.
100%. Yeah, it is.
And that's a good segue to discuss also Catalyst, because and then a lot of the people that are thinking also in starting a project, and they might think also on doing something like what you mentioned, just a fair token launch event, but they might also be thinking at the same time, how do we make sure that we have some enough capital at the beginning to be able to at least start with the first phase. And that's where I think a very good use case is a very good use case for Project Catalyst. You guys participated in that, and maybe you can tell us a bit about that experience.
Totally. Yeah, I agree, Ryan. It's a great Catalyst has been one fantastic for that use case specifically, like a true startup team that like wants to get off the ground and, has a real idea and concept, and, more than that, like technical documentation and the capability to kind of implement, that vision into reality. I think that whenever you can like articulate that in just a simple proposal and then present that on a platform like Idea Scale, and actually, 6 weeks later be in the running to get funding for it, like that to me is a very powerful vehicle. And that's essentially what Catalyst is. It's like a, idea, innovation, like really driver. And it's going to be a whole VC in the cloud for Cardano. And I think that it's kind of just like ramping up to becoming what it's going to be, fund 10 on, right? It's going to be really competitive to even, get funding. You're going to see entire software development firms like Twig and Fire Labs, some of the firms that we work with, coming in to kind of, you already see Vacuum Labs coming in, asking for, significant amounts of money to build things like infrastructure plays around Cardano. So that's coming, very quickly. And for us specifically, we had like an interesting experience with Catalyst, because I was a Fund One kind of focus group participant. And actually that's kind of when we started formulating the plan of Liqwid. And working with Josh Akpin, who was another one of the Fund One focus group participants, and he runs Proof of Africa, the Nigeria, West African focus stake pool that does a lot of like really cool education things for open source devs in Nigeria and Africa. Josh was really keen on like explaining the current state of their system in terms of mobile money markets, digital money, the access to lending and borrowing in places like Nigeria and across West Africa, really. And that really was the birth of Liqwid in many ways. But it was during this catalyst Fund One kind of like really early idea innovation. And we were just like really just happy to be there, putting out ideas. There was no money at stake. So we were kind of just like the guinea pigs that IOHK was using to test out the concepts, the process of going from idea phase to voting phase to going through governance essentially. And I think that we used a lot and leveraged a lot of the experience from that Fund One, like how to actually put together a proposal that was competitive. Again, my day job is also in consulting, so I do write like RFPs and things and respond to kind of government contracts pretty often. In fact, for the first like 2.5 years of my job, this was like pretty much all I did. Like I was the lead analyst when it came to like responding to these RFPs. So like I definitely, understood what putting together like a competitive proposal, like for grant funding or something like that looked like. And in many ways, Catalyst kind of represented the opportunity to do that. And even, in Fund One, it was actually like, really competitive. Like some of the proposals that people had put together for their ideas, some came on in Fund Two and got funded, like, ours with Liqwid and Kyle's, I believe, with his IoT hardware project also got funded. And I believe Umed's also. So, many of us from Fund One, went on to get, funded in the next round, but we used kind of that early experience to like see, okay, this is how the process works. This is where IOHK is going to like play a big role. This is where it's going to be up to the community to decide things. This is where you need to like market yourself, and this is how you can kind of do that. But I definitely think that, now with Catalyst, where they're at, IOHK is going to hire a product owner for that role soon. Like they're going to really try to like make that its own, decentralized product kind of for the Cardano community, by the Cardano community in many ways, just really facilitated by IOHK. So I think I definitely think you're going to see $1 million funding rounds in the near future. And like I said, like entire software dev firms coming in with like either DApp or, infrastructure plays, whether it's a new SDK, whether it's a new API that they're going to, build on their infrastructure to kind of, maybe open up the access to different things in Cardano. I definitely think we're going to see a lot of that coming pretty soon. But the most important thing is always like the idea, the team, who's going to implement it, making it just very clear that you have like that level of one, expertise, two, have fully fleshed out your idea concept into whatever technical designs, maybe a white paper, maybe a, a business, review document where you talk about like who your incumbent competitor is or something like that. Like just making sure you have like a layer of like depth to your idea and concept that like someone can truly come in and audit it, because like that's all I have to make sure I do when I submit to the government, right? Like I just have to make sure that like my RFP is like as detailed and like, as, fleshed out as this, whatever I'm responding to needs to be, right? Like I'm not even saying you have to like have like, full on code sprints and like already be launching your product. I'm just saying like, with how competitive I see Catalyst becoming into the future, it's definitely going to be like 4 very mature startup teams who have already thought through their entire concept, maybe have a proof of concept already existing. Like even in this round, you see some of these competitors already have, proof of concepts out there. And, we're going to launch something that's, kind of an early soft launch on the KVM. And that's going to be, in many ways our MVP product that will ship to the Cardano community. But I mean, I'm not going to be surprised if in Fund 5, Fund 6 on, you're seeing like teams come in that already have an MVP or already had that, launch, soft launch product or so, because it's just going to get that competitive.
Yeah, that's true. Every single fund is going to get more and more competitive. Right. Well, I think that we have discussed already a lot about also, there are other things. Maybe also it would be great if we can have a follow-up maybe in a while. Then we can also discuss some questions about the treasury and governance. Also, how you guys will do that.
Totally.
Also in Liqwid.
We can talk about that now if you like. I'm not in a rush. It's up to you.
Yeah. Maybe we can discuss the part of. I think it's particularly interesting that we were talking about the governance on Cardano, and the great thing is that now you can, as Charles has said in a few videos, then the project will be taken, or there will be considered as a first class citizens. So then that means basically that you will be taking advantage of all the features, if you will, of Cardano. So when it comes to governance, for example, have you guys looked into that already, and what are you taking from the experience of what you have seen in Cardano?
Yeah, that's a great question. I mean, we think, like, you've heard me talk about the governance aspect of this. It's as important as getting the market side right, especially when you're talking about like a sustainable protocol that's going to be around for years and years. I think that we definitely want to use as much as we can from Voltaire and from native assets on Cardano, whether that's like the DAO structure for voting, whether that's the on-chain treasury that we have that's tied to LQ tokens. We actually have a pre-seeded amount. So when you look at like our breakout of where different percentages of tokens are allocated, it's like 10% for yield farming, 60% set aside for the user distribution. There's actually 5% set aside for a DAO treasury. So that will be basically an address that is controlled by the LQ voting, voting power DAO basically. And it is specifically how that structure is going to like operate compared to how it works right now for Cardano and ADA voting and Catalyst. We haven't fully fleshed out, to be honest. We're still kind of even waiting on native assets to kind of launch, and at that point we can kind of see exactly what the functionality in terms of voting and in terms of tacking on an on-chain treasury structure will be for that. But yeah, essentially, like, we're going to seed an on-chain treasury for Liqwid, and we're calling it the Liqwid DAO treasury, and it'll have 5% of the LQ tokens. And it will actually be kind of like self-sufficient in many ways, like Catalyst. Like, it will pay itself a small percent of the actual revenues that the protocol begins to generate when you have borrowers who are paying, every block a very small amount of APY on their outstanding loans. So that's kind of how we envision our treasury system to work. We've actually already built it out on Ethereum Solidity World, and we'll probably launch a version of it on the KEVM when we do this kind of soft launch. We're gonna actually introduce the yield farming mechanism only. So it'll be very similar to the ITN experience. ADA power holders will be able to come in, use a MetaMask-like wallet to basically send their ADA from the Cardano main chain to the KEVM side chain, and basically yield farm LQ tokens by supplying their ADA, minting Q ADA, and then supplying that to the staking contract. There won't be any like borrowing enabled, like you won't be able to use any of the supplied assets as collateral. So we won't be like allowing borrowing to even happen on that KVM sidechain. And that way we don't have to worry about liquidations and things like, there's just many things that you don't have to kind of handle at that moment, while still being able to prove out the business model, still being able to kind of introduce users into our system and start actually really distributing the governance token. It'll be a simple mechanism to transfer their ADA back from the KVM to the Cardano main chain. And the same process will build, an extension on that UI to take their, KEVM LQ and then transfer that into, Cardano main chain LQ that they can use in our DApp on Plutus when we launch that, when Plutus gets here in the next couple of months. But cool. Yeah, that's essentially the process of what we're doing with governance. But yeah, we do want to use a lot of the native, kind of governance functionality that you get from Voltaire. And I think I've heard Charles many times, like, he talks about Cardano becoming this like governance as a service blockchain. And to me, like, that's a huge selling point, because like you'll never see Ethereum or Vitalik say something like that, because they can't. Like, there is no notion of on-chain governance built into that model. And the fact that it's native to Cardano is something that like we truly don't even, like, I'm here saying, like, I actually don't know what the full functionality will be for that, but I do know it's going to be powerful. If you're saying on-chain treasury, if you're saying any native assets gets, the same kind of voting mechanisms, if not, different, voting mechanisms that we can introduce ourselves based on it just being a native asset on Cardano, there's
that's
huge,
so powerful.
Huge power in that. Yeah. So yeah, there's a lot we can do there. It's exciting.
That's one of the things that makes it so appealing for launching or also having a native token on Cardano.
100%.
All right. I think like for all the listeners and viewers of this podcast, if you want to know more about Liqwid, you can go to liqwid.finance, liqwid.finance. Where else can they, if they want to just know more about where can they contact you guys, or like do you have also
we're on Twitter at Liqwid Finance. I think actually starting with our Medium intro series is a great place to like read about the protocol, read about the governance structure that we're implementing, read about how the yield farming and user distribution will work, and kind of the tokenomics of the system. And that's all. If you just type in like Medium Liqwid intro series, LIQWID, you should be able to find that. And then in those Medium articles, there's a link to our Discord if you want to join our channel and our server, and you can read through the individual kind of channels that we have there. And they talk about everything from general chatting to collateral requirements to credit and identity. So we have a lot of information that we kind of put together from our price, in our kind of early discovery days, like literally in ideation back in last summer. And it's all up in our Discord. So I encourage like all Cardano DeFi builders to join the Discord, read through those channels. Like if you have any cool ideas or concepts, send me a DM. I would love to help you get through that concept ideation stage and actually put together a proposal.
Awesome. So you've heard about it, guys. Well, with that said, I'd like to thank you, DC, for your time and to explain about what you guys are doing at Liqwid. I know there's a lot of attention from the Cardano community towards Liqwid, and it's partly also because you guys have been very active on the community and part of since the very first fund in, like you mentioned, on Catalyst also. Well, thank you very much. And yeah, it will be great to have like in a few months from now catch up to see how things are coming along after you guys are launched, and then we can see how things are going.
Yeah, absolutely, Ryan. I look forward to it. Thanks for having me. I appreciate it.
Thank you. Cheers, and see you guys on our next episode of the Cardano podcast. Cheers. Bye-bye.
Cheers.